What's going on, everybody? This is Phil from Millennial Money Gains, and welcome back to a brand new video. In today's video, we are going to be doing a full stock analysis on Best Buy. Ticker symbol is BBY. This one has been catching my eye recently because it is at a pretty decent discount, and we're going to learn more about it here today. So if you guys are hyped for this video, please make sure you smash that like button. If you guys are into dividend stocks and stock analysis like this one, then make sure you guys subscribe to the channel because I do post here at least 2 times per week, and I post videos just like the one you see here. But getting right into it, Best Buy. It has been a success story of the pandemic. So the pandemic has been a downfall to many, many retail settings, but Best Buy has thrived and survived the pandemic. They are continually to be at the top with their earnings and doing their right by shareholders. As you can see here, Best Buy named the 2022 Just 100 list, which recognizes companies by doing right by all their shareholders. So, let's hop right into the numbers here. Let's do this. We are going to hop right in and talk about exactly what this company has to offer and whether we think it is a good buy for us to add to the dividend growth portfolio. So, Best Buy, for those of you that do not know, they engage in the provision of consumer technology products and services. It operates through 2 business segments, domestic and international. The domestic segment includes operation in all states, districts, and territories of the United States, operating under various brand names, including Best Buy Mobile, Geek Squad, Magnolia Audio Video, Napster, and Pacific Sales. The international segment is made up of all operations outside the U.S. and its territories, including Canada, Europe, China, Mexico, and Turkey. It also markets its products under the brand names Best Buy, BestBuy.com, Best Buy Direct, Best Buy Express, Best Buy Mobile, Geek Squad, Great Call, Magnolia, and Pacific Kitchen and Home. The company was founded by Richard M. Schulze in 1966 and is headquartered in Richfield, Minnesota. So, let's hop right in to Best Buy. Currently trading at $95.01 at the time I am making this video. It is down about 16% for the past year, and that has been pretty recently within the past 2 months or so. So as you can see here, in November, it was at its peak of $135 a share. And now, like I said, sitting at $95 a share. In the past 6 months, it is down 13%. In the past 1 month, it is down 1%. And in the past 5 days, it is down 4%. So, is Best Buy one to be looking at to add to the portfolio? I think it is. Let's hop right in and show you guys the dividends that they have to offer. So they do have a dividend yield of about 2.9%, which is an annual payout of $2.80 per share, which is a very small payout ratio of under 28%, which is really fantastic. That means they have a lot of room to grow this dividend. They have a 5-year dividend growth rate of 20%. So imagine getting a 4% raise every single year for doing absolutely nothing. 4% every single year for doing nothing. They have a dividend growth rate of 8 years going, and I think they have a lot more room to do that and grow that for a longer period of time. So they pay out at 70 cents per share on a quarterly basis. So a pretty decent dividend there. Nothing too high, but that's where you want it to be for a dividend growth portfolio. If you have a long investing horizon, then this is the place you want to be at. So let's hop right in here and look at the financials of Best Buy. So in January of 2017, they had income and revenue of about $39.4 billion. And as you can see, it went up every single year, which now in January 2021 is sitting at $47.2 billion, which is pretty impressive because it doesn't look like the pandemic slowed them down at all, right? They rose every single year for the past 5 years or so. Now let's take a look at their balance sheet. The main thing we are looking for here is whether they are buying back some shares, right? We want to see that increase in shareholder value and decrease in outstanding shares. So that is one of the main things I look at this page for all of you that, excuse me, for all of you that ask what I look for when I am analyzing different stocks. So, total shares outstanding, they had 309 million in 2017. And as you can see, it is decreasing all the way. And now in January 2021, they have 250 million. So they have decreased about 60 million shares in approximately 4 years. Pretty good. Pretty good. So that is a big check mark for Best Buy. Now, let's take a look further into their financial statements and numbers. So like I said, total outstanding shares, about 240 million. Market cap right now is 23 billion. The PE ratio of a very small 9.33. We look for anything under 25 on this channel, so pretty good there. They do have a price to book ratio of 5.5 and a price to cash flow ratio of 11.15. Let's take a look at some of their liabilities and debt. They do have $52 billion in revenue with 15% revenue growth. They have $3.46 billion of cash on hand and long-term debt of only $1.2 billion. Very good there. They have total debt of only about $4 billion, which they have pretty much almost enough cash on hand to just cancel that out. So very, very good there. They have free cash flow sitting at $717 million, which is enough to pay their dividend. And that's what we want to see. We want to see enough cash flow because that is how these companies pay their dividends. Without that cash flow, they can't pay the dividend, right? So we want to see that keep rising for Best Buy. So let's take a look here. Take a look at some of their growth grades here. So it is rated a C- on revenue growth year over year, which is 15%. So that is, the sector median is about 21% or so. So they are below the sector median. That's not something to scare me really at all. We'll take a look at their evaluation. And right now it's rated a B, and that is because of their PE ratio. Sector median is around 12, and they're just sitting around 9. So not too bad there. So they could be a little bit undervalued right now. Right, so that's going to wrap it up pretty much for Best Buy. Those are the things I look at. Obviously, there's more in depth, but those are the most important things I look at. You got to go on their website, look at their investor relation page, look at the 8K forms and read through those, read through all the financial forms, read through their investor presentation. There is a lot more that goes into looking at and analyzing a stock to making sure it is the right buy than just that. But this is a good place to start. I want to know what you guys think about Best Buy in the comments down below. Let me know if you're invested in them or if you're thinking about getting into a position. Because I do think they are pretty undervalued right now. And I am looking at this one very closely. I definitely want to see it come down a little bit more. So we will see if that happens. I did start a position in Starbucks if you guys saw that video. But let me know what you guys think down below. If you guys did take anything away from this video, please make sure you smash that like button down below. And also hit that subscribe button because we post videos just like this one at least 2 times per week. And if you like dividend investing or investing in general, then we are the channel for you. I appreciate you all for watching, and I will see you in the next video. Peace!